Will mortgage rates ever drop in 2025? Well, let's dive into this because first and foremost, nobody knows the real answer of when rates will drop or if they will drop. And right now we have a lot of people that are like, oh, I'm going to wait for rates to drop. And that's not necessarily a great plan. Maybe it is for you. Maybe there's reasons for it, but maybe you're making or defaulting to the assumption that you're going to wait until rates drop. The question is, where do you think rates are going to drop to? So let's just take a step back. When we think about what has happened in our country and where we've been, the pandemic led us to ultra low interest rates. Our country, the globe, the world was going through a crisis, and part of the solve for that and to keep economies moving where federal governments were pushing money into the economy. That led in part to much lower interest rates than even the norm. So if we think about, hey, I'm going to wait until rates get back to 4%, that's probably not realistic unless, of course, something else comes along that is such a globally important crisis. With that said, think about averages over time. And this is easy information to gain. And I do this quite often. It's okay to leverage Fred. And Fred is an online research tool that will tell you where mortgage rates trend over time. And I would encourage you, remove 2020 to 2022, because that was the year that interest rates started to move back up from those ultra lows. If you remove that out, you're going to see average interest rates closer to where we are today. Not quite where we are, but closer. Just know the pandemic and that crisis globally led to ultra low interest rates. And it's highly unlikely we're going to see those again. Now, interest rates started to have a rapid increase starting in spring 2022 to 2024. Now, a lot of things were driving that. It's never just one thing. And that's very important to know as we sit here and we think about or predict what's going to go on with mortgage rates. What's the Federal Reserve doing? What are the global markets, financial markets doing? What is going on with regard to tariffs? What is going on with regard to unemployment or employment and inflation? All of these things go into what's happening and what's going to happen with mortgage rates. So it's never just one thing. And I'd like to just say that, reshifting our thought back to what is normal, it's hard because I get it. An interest rate that is in the sevens, let's say, and frankly, we've been there over the last couple of years. That interest rate determines your payment, but it doesn't mean that that's your rate forever. And it also is important to know that there are strategies to get that rate down while long-term rates are a little bit higher. So I'm going to dive into those in a second. But here's what I'm telling my clients. First, rates may not go back to 3%, and that's okay. If we can get rates just under 6%, I'm telling you, there are so many people on the sidelines. We're going to see those gates just open, and then it's going to lead to another market condition. There's always something going on in the real estate markets, whether it's a seller's market, whether it's a neutral market, whether it's a buyer's market, whether interest rates are here or here, there's something that's going on, and it too shall pass. So considering all of the options, and this it doesn't speak for every single community across the country because we lend across the country and we see a lot of different communities. But there are a lot of communities out there where sellers are very interested in bringing affordability to the buyer. Now, that could be in combination with maybe a closing cost credit to help buy down that interest rate. That could be a closing cost credit to, instead of buying down the interest rate, it's doing some type of short-term temporary buy down strategy that helps give a runway on those payments for the first 2 or 3 years of the home loan. Or maybe it's those things in conjunction with a price drop of the house. The point is there is a lot of negotiation that can take place. And again, don't just say, well, not in so-and-so area. I get it. We still see multiple offers in certain areas. This doesn't stand for every single street, every single community across the country. But I will say that right now it feels, based on what we observe just in doing this job, that there is a lot of seller concession, seller contribution, seller negotiations that are going on today. And that brings value to the home buyers that can qualify even based on today's interest rate. So don't rule that out. It's a full picture as opposed to just one dimensional, only interest rates. Secondly, here's what I know. It is hard to time any market, not just the mortgage market, not just the real estate market, but any market. It's very difficult to time it. And then lastly, strategy beats timing all day long. So going back into what strategy means from a lending standpoint, working with your real estate agent and working with the listing agent and the seller, there's a lot of things that can come together to be able to help bring affordability and help get you into that home. And don't discount new home builders. New home builders, they've gotten the message and they've been offering significant interest rate buy downs over the last couple of years to get people in homes. And if you are a seller of a home, don't think that that is out of the reach for you. The same strategy can work with you and me. If we're going to sell our homes, the same strategy can be deployed. And that essentially is using some type of seller credit towards the buyer's closing cost, which helps them be able to bring affordability, helps them get their payments where they can get their arms around it, and they're excited to move forward. You have questions about any of this, don't hesitate to reach out. 480-725-0150. You can call or text that number, and a Kelly Zitlow mortgage advisor will hop on the phone, talk through your scenario, talk through if you do have to wait. Maybe you're working on credit. Maybe because of your payment threshold, this interest rate today won't work, but maybe it will based on one of these strategies I've talked about. All right, we'll see you soon.